Well, our next guest has been sounding the alarm on the market sell-off for months. Mark Yusko, CEO of Morgan Creek Capital Management, says that not only is the bear market here, but there's even more pain ahead for this bear market. Let's go to Mark in Chicago. Mark, great to see you.
Hey, Melissa, thanks for having me. It's great to be with you this afternoon.
So this really stood out to me in the notes that I got for you, Mark, that this is going to last until 2020?
Yeah, look, we talked about this when we first got together in October, that I think it's a 2000, 2001, 2002 cycle. You know, 2000, we were only down single digits. It all happened from September to December, down 9%. Then we had the shallow recession in 2001, down 14%. And then you had the debt crisis in 2002, down 22%. I think the same thing plays out here. Shallow recession next year, down double digits. And then the debt crisis with all these over-leveraged zombie companies hits in 2020.
So that specifically, you're talking about small caps?
So it's a lot of small caps, but it's also some mid caps and even some large caps. There are some companies that have borrowed money to buy back stock. It's great for the management. It's really tough for investing in the future profitability of the company. And when the market starts to turn and when interest rates rise, it can be very deadly. And we saw that in 2002. I think we're going to see it late 19 into 20.
So if you believe strongly that this bear market will last until 2020, why do you want to find a safe place to hide in equities, in U.S. equities right now? Because you're saying to us here, safe places to hide, healthcare, utilities, MLP. Why do I want to be in any of that? I mean, if I knew that there's a bear market until 2020, why?
Well, great. I mean, one thing you can do is you can get hedged, right? You can go long and short. There was just a segment on hedge funds earlier. Everyone hates hedge funds. You know, our hedge fund's up about 4% this year. It's looking really nice, and we're making a lot of money on the short side. So the key is you want to own something because MLPs, for example, you get paid 8% to wait. So you could be wrong by 8% and still not lose any money, maybe even outperform cash. So there are pockets of opportunity. You guys were just talking about Apple a second ago. From a valuation standpoint, that versus the other FANG stocks actually looks pretty attractive. I could go long Apple and short some of the others like Amazon and Netflix and actually be very comfortable. So I think there's lots of interesting stuff out there. Then you go overseas. You know, I love the emerging markets. They've done much better in the past week, not down nearly as much. In fact, some of the markets are up.
Yeah, I mean, the Fed and the weakening of the dollar certainly helped. When it comes to cash, though, Mark, are we at a point in time where people should be thinking maybe cash is an option?
Look, we wrote in January a couple things. One, wrote cash is king, and people said, oh, you guys are idiots. And I said, well, we're as idiotic as people like Warren Buffett, who has the highest level of cash ever, Julian Robertson, highest level of cash ever, George Soros, highest level of cash ever. They look pretty smart. David Tepper, same thing. And then we also wrote that bonds, long bonds, would beat stocks. And we looked really dumb up until the last couple of weeks. And now long bonds look, surprise, surprise, have beaten stocks. I think long bonds will beat stocks again next year.
Shorter term call, Mark. I mean, how bad do you think this gets on a point basis on the S&P?
Look, I think the selling will take a little break here. I don't know that we'll get the big Santa Claus rally that everybody's hoping for, but you know, I thought we'd be down single digits for this year. It looks like that's where we're going to end up. And then I think, January people will have the hope rally like they always do. And you need to watch those first 5 days. Then I think we start down. I think next year is going to be a dreadful bear market. And a bear market is a market that goes down most days, but goes up a lot on good news or perceived good news. So we'll have a lot of spiky rallies. But at the end of the trip, it's like a rubber ball bouncing down a set of stairs. Each bounce is higher. That's just kinetic energy. The end of the trip's a bad place.
Mark, thank you. Good to see you.
No,
Happy
thanks
holidays.
For having me.
Mark Yusko.
Happy holidays. Actually, happy hodl days.
Maybe
hold your Bitcoin.
Mark, thanks. All right, let's trade it here.
So I think you said a couple.
Do you agree with him? I'm curious.
Listen, you can be in cash for a while, but then ultimately you have to deploy it. Okay, and I think he makes a lot of good points. So you use cash tactically when you start getting nervous about things after you've had long periods where you've been very profitable. I think Apple, you guys all make a really good point. I mean, here's a company with an amazing balance sheet. It's trading at a fundamental situation where it was a year ago at this time, and everyone loved it there, and it went up 50%. So if you want to start dollar cost averaging some of that cash into a position after you missed it.
Part of a position.
That's right. And you start working it down. And if you understand there's going to be a choppy period over the next year, I think that makes sense.
Or if things have changed and the guidance that they're no longer giving is the tip of the iceberg, then you're in for a world of hurt, even in Apple. And I think this has been a reversal of what everyone thought it would be. That would be the ultimate reversal, that it's a value trap, not value.